Hey guys, what's up? So this is going to be my first video that I'm going to do. Kind of want to cover a few different things that I do kind of for my day. It's a little late in the day already. It's 11:34. Normally about 4:15, I actually go and I open up all my different charts, and I start off with the Aussie. And I have a Google Sheet over here, and in this sheet, I actually keep track of the ATR value. If you're not familiar with what the ATR is, basically it gives you an average of the range that the candles have moved during the time period that you've set. The default is 14 days. Or 14 for the period, and right now that would give us 14 days as we're looking on the daily candles. So what we're going to do is kind of see what I do to start my quote-unquote start my day when the candles get ready to close. Now that's the best time to do it on the daily, because obviously you want the candles to have moved the majority that they're going to move in the day, and you're hoping that by like 4:15, 4:30 they've already done that. So the amount of movement that can happen after that, while it could be large, you don't want it to skew the candle. Like if you do it right at 6 p.m. Eastern Time, the candle's only been open for an hour. It could have moved literally nothing. It can throw off your range. Now this is important because this is how I'm going to get my proposed stop values. So the way you get it is you add the ATR as an indicator. If you go in here, you're able to go to ATR, average true range. You add that to the chart, and it'll actually put it in its own window, but you can actually drag it up into the chart and then just view it and hide it as you see fit. So right now, if you're looking at this, we're at about 64 for OddCAD. Now, I've already taken my readings for the day, so we'll take a look and see. So it's moved a little bit as far as the overall candle size. I had it at 65. It was earlier, so now it's 64, and that can vary a little bit. So the way we're getting our number here in the column that we use for our determined stop value is we actually take the ATR, multiply by 1.5, and that gives us our proposed stop value here. So I've got that there for all the pairings. So yeah, it's kind of tedious. You go through, you grab your ATR for each one of your pairs, you put it into the spreadsheet, so that way I can refer back to it. And it's really beneficial because when you start looking at some of these candles, like look at the Aussie versus the Kiwi here, it's moved pretty well today. So if we actually go into MT4 and take a look here, and we do the Aussie Kiwi. Now this is actually my test account. It's all demo trades. I'm actually running an expert advisor on this as well, to try and find some other potential trades that I may not be able to pick out. So in looking at the Aussie New Zealand, if we zoom in here and we switch our candles, so if we look, it has already moved. That was our entry, so it's already moved 51 pips on the day. If we go back and check, Aussie New Zealand averages 56 pips on the day. So I can look at this trade and know that I may not want to get into this right now, because if I do, I could be setting myself up for potential failure. Because if I jump into this trade now, tomorrow it could come back the other way. So we want to see kind of where this candle goes. Me personally, I would not jump in on this yet because we have not had a crossover of the EMAs. We do have some positive push here on the RSI, which is great, and we do have a crossover a couple times of the MACD, but you'll notice we have had the crossover a few times of the MACD, and we've never had a crossover all the way down of the EMAs. We've gotten close, but never crossed over yet, so I really want to wait and see if we get that crossover before we actually push out a signal to jump in on something like this. So that's kind of what I'm thinking at. But let's see if we can find one to jump in on here. Most of the candles have moved pretty good today. So just to give you an idea of my trading mentality, primarily I am looking for the starts of new trends or continuation trend trades. Those are going to be my primary focus because those are going to be my more profitable trades, I believe, in the long run. So this is one that I'm personally in on my personal account, and you can see that it's already got an entrance here today. If we go back, we've gone up, down, and we've curled back up, getting some good RSI. We're getting to the 55 EMA. We're currently being rejected. Is that the 50? Yeah, let's do the 50 EMA. So we're actually being supported by the 50 EMA right now. We do have the crossover here, and this is why I entered the trade. I personally do like this. So this is a good example too. So you see here yesterday that it moved, how much did it move? It moved 25, about 26 pips. So if we go look at your JPY, it averages about 82 pips for movement. So if you entered this and seeing that it had crossed over, getting your confirmation, this is where you get some good movement up, and a good entrance is on the next day. So it did open here, I believe. Yeah, so it opened high, it's withdrawn a little bit, but it's almost as if we're testing the 50 here. I do feel strongly about this trade. If anything, this would be a great time to enter this trade. So I am using MT4, and we're going to go ahead and just add a new trade, even though we're already technically in this on the demo account. I want to show you guys just kind of how the ATR works. So here we've got, this actually comes out to 1.2382 on the daily time frame. So we go back 1.2832. This is a demo account as well, don't freak out. So we go, our current price is 128,877. If we subtract 1.2382, this is our suggested stop. So if we come here, use our position size calculator, 127,638. So this is giving us our suggested stop value down here if we were to enter this trade right now. And you can see it's actually got a take profit up here. It looks like it should be a 2-to-1 at least. Let's figure out if we can just throw a quick little retrace here. So that is, I'd say that's a good spot. We're looking at 139.50. And if we were to enter 2%, it's telling us it's only a 1.63 on the risk to reward ratio. So that's kind of outside the normal limits. I actually do try to only go into trades that are 2 to 1. That being said, we do have a fairly decent confirmation here. 2 different ways you could look at this. You could actually pull back and just go with 1%. Every little bit adds up. This is a $3,300 account, so you're looking at a 1% risk is $3,340. You could end up here. Now the other option is, you could always, once the trade gets into profit, pull some, let the rest ride, and see where the trend takes you. So we're going to do 2% just because it's a demo account. We want to do 0.06. Do 127,638. Do our take profit of 139.50. And we're going to do a market execution just because we're at a point where we're okay with making that purchase. And we are in. So now we are playing. And if you come down here and look, there's your JPY. Ran long. Bought 0.06 units, and that comes out to about 6,000 contracts total. The way you can figure that out is you can find your currency pair, your JPY, and you right click on it, go to specification. Alright, so we're looking at contract size is 100,000. So if you're looking at total number of contracts, we're sitting on 6,000 at 0.06. So at this point in time, we've got 6,000 contracts of this currency expected to go long and raise in value. So this is also a good place to go to see. So if we're on your JPY and we actually are shorting the euro, we would end up gaining swap value. But because we are longing the euro, we are actually going to end up taking a little bit of a loss each day that we hold this position open. We are expecting this obviously to be a trend and trend up, so it's just something to kind of keep into consideration because some pairs are really favorable depending on which way you actually trade them. USD is always a good one to look at. Right here, if you look, either way you go with USD, you're paying to keep that position open. If you switch back to Euro USD, this is actually where if you short the Euro USD, you can actually make some decent money depending on the amount of contracts that you keep open just by simply having that contract open for a length of time. You're gaining, in a sense, you're gaining the interest rate. And you've got the 3-day swap here. Basically, that triples the swap amount that you get. And there's more information on that. I think Investopedia is a great place to learn about swaps. So I always recommend you go there. And if we look closely, so we are we're sitting right above the 50, right on the 50 I should say, and we've got our entrance here. And if you're curious which one is which, it looks like our entry is this one down here. And you can also double check with your order number. So that way you can keep track of your orders, which ones stops and which ones take profit you're looking at here on your chart. So that is kind of a real quick overview here of how to enter a trade on MT4. Kind of what I do, what I look for as far as on the daily time frame. We do look for that crossover in the positive here. We're using the 5 and the 15 along with the 50 for our support. And I believe the 200 should be on here. If not, I'll add it. I'm not 100% sure it's on this template or not. We are looking at the RSI, and we're also looking at the MACD. I like to switch this to white. stands out a little bit more, easier to see as far as your ticks go. So if you wanted to try and find any kind of divergence, like right here, you've got a low, and it doesn't even come back down for that. It looks like it's just been positive pretty much the whole way up until you hit here. So even that would be kind of a divergence, because you got a low here that kicked down, and then you've got a low here that kicked down, hit pretty much the same value. So you get the equal low with a lower low on the MACD histo that shows a nice little divergence basically coming across, and you should expect a raise here coming up. And it could be a pretty nice movement over the course of the next couple days. If we start to see any kind of really heavy movement like we did here on the way down, if we see it shoot up and start to really run towards our take profit, close half of it, move your stop up to cover yourself, and move your take profit up. Move it up to your next resistance line. That way, if you're not sitting there, you're at least going to cover yourself. You could even just put in a trailing stop. Put in a trailing stop, and you can do that just by going down, find your play, you right-click on it, trailing stop, tell it how many points you want to do. The number of points is actually the number of pips that you want it to be set back with an extra digit on the end. So if you wanted 10 pips, it's 100 points. If you want 100 pips, it's 1,000 points. So that's kind of the way that works. A little confusing, I know. But if you put in a trailing stop, you have to make sure that you keep your MetaTrader open, I believe, in order for the trail to actually work. So that is also something you need to keep into consideration, that you need to have the desktop version open somewhere so your trailing stop can work. And I'll double check on that just to see if that is right. But it is kind of what I have personally noticed. But yeah, that is how to kind of work around through MetaTrader, what I kind of look for on a daily basis with my ATR, how that plays into me picking my stop locations. It could be something too that we're going to get into a little bit later as far as the ATR goes, because I want to get you guys away from stacking up right below a typical fib retrace level. Because if you do that, you're just going to be fish in the water. You're going to become blood in the water very quickly, and the sharks are going to come and eat you. They know you're going to hide behind the fib lines. So in knowing you're hiding behind the fib lines, they're going to push down through the fib. You're going to get these long wicks, and that's just people getting stopped. And you don't want to be a statistic. You want to be a winner. You want to be on the winning team. You don't want to be one of these guys who got stopped out in here. Because this would have been a good entry. You could have someone who's playing reversals, and they're looking for their entry here, and they want to be able to ride this, trend up. And they sit here behind their fib, and they think, "Oh, I'm perfectly fine. I'll put my stop in, and nobody's going to get me here." And we'll just see. I bet you they. Yep. So here's the 6.5. So if you were trying to enter on the 6.5, maybe even the 7.68, yeah, look, we punched down through the 7.68, and we actually end up going. Right up if I didn't cover it. So we end up getting about 22 pips down. So 22 pips below the entry if you're trying to play tight, especially if you're playing like on a lower time frame and you're really trying to get in there. 22 pips on a low time frame is a large movement, all things considered. I mean, let's look at, let's say you're going down to the 15, right? A lot of people like playing the 15-minute time frame. And just for giggles, let's take a look at the ATR. It doesn't matter as much here because every 15 minutes we're getting a close on the candle. So yeah, we're looking at 4.8 pips with a high of 19 pips here through this movement. So 22 pips, man, that's a lot. If you're stacking up and you're trying to make a nice tight entry, it's going to definitely be more difficult for you to play that entry right if you're hiding behind a known value that people expect you to enter and hide behind. Whereas instead, if you're playing on the daily time frame, and even if you were shooting for this, if you're using your ATR value, which is 1.2, so that's 123 pips. We're giving it a lot of leeway. 123 pips. Think about that. That is a lot of leeway for your entry. And you're entering on the 768. You're looking at about right here. So you're actually hiding below even the 886. So you're hiding all the way down here. And sure, your risk to reward suffers. At the same time, you're only getting 33. So you're looking at 337 pips on the upside. So you're still getting out with a 2-to-1. You're still getting your 2-to-1 ratio, even with having that very large, in this point, at this point, it would be a large case. We can even look at that day. If you're looking, then it was 111 pips. It's a large entry. But at the same time, you're safe. 111. Right here. So you can enter this trade. You're in it. You're making profit. Can't ask for anything better. Something to consider. Just something to consider. Looking into with the ATR. I really do like it. Just actually found it recently, not going to lie. And I'm a big fan, big advocate. So you will see me using it quite a bit. Alright. And I will be hopefully making more videos again, guys. This is just one of hopefully many more to come. And we will see where it kind of goes from here. And if you have any questions, just hit me up in the group and let me know what's going on. And hopefully you guys like it.